What's up, apes? Welcome back to the Daily Peels Daily Podcast of the day. Thank you all so much for joining us once again on this beautiful Tuesday, August 6th, 2024. It is currently 6:42 p.m. Coming at you guys a little bit earlier than expected. I got dinner reservations here tonight. Big event going on over here at the Daily Peel Global Headquarters. So that's why we're coming at you a little bit earlier than otherwise, but we still have plenty to talk about as always. Thankfully, the market today decided to be much like my green screen in the background, printing nothing but green, moving up. Very good day for the session and a very good day for the fellas over at WSO Alpha. Some of you may remember that yesterday I did fire every single person on the WSO Alpha team, but today I have actually rehired them as well. Obviously, we cut their contracts in half, but still, it was a solid day for the portfolio. So WSO Alpha led the way up approximately 1.06% for the session. We did outperform both the S&P 500 and the NASDAQ. The S&P 500 on today's session was up an enormous 1.04%, and the NASDAQ a kind of eerily similar 1.03%. The Russell 2K did outperform us, so a very good day for small caps at 1.09%. And fuck the Dow. Nobody cares about the Dow. It's only 6 stocks, and it's only quoted by people who have pacemakers or broken hips or some kind of gray hair in some location on their body. So we are not going to be talking about the Dow because fuck all that shit. Nonetheless, very solid day for U.S. equities. It seems like the temporary depression kind of hit its peak on Monday of this week. Now, clearly, if equities aren't responding in a similar way, it might not be the beginning of a bear market. We could be experiencing like a very light version of a dead cat bounce. But based on that economic data and the earnings data that was coming out today, it seems like the past couple of weeks and the downturns that we've seen since July 23rd of this year have largely been triggered by big tech earnings and their very brittle valuations. Once again, these earnings reports, although largely beating expectations, they're not beating by enough to justify the extremely high, extremely brittle valuations that these companies carried. So naturally, the market is going to decrease those valuations on lower probabilities of continued exceptional outperformance going forward, and that goes for both earnings as well as economic data. Okay, so with all that said, take a chill pill, relax a little bit here. We're going to kind of ease things up a little bit today. We got a lot of fun stuff to talk about here. So first, we're going to be diving into the economics of the Olympics. Yes, that is right. Breaking down all the numbers and all the money math that you probably don't care about, but it's pretty interesting to read about here. So we're going to be breaking down the numbers related to the Olympics. Obviously, we get a lot of stock movers for the day. Anybody interested in artificial intelligence, definitely stick around to see exactly what's going on with names like Palantir, Uber, Chegg. A lot of AI action on the session today. And then finally, we'll finish up speaking about Google's antitrust loss. As a reminder, this is the first loss in an antitrust case for a big tech company since 1998, which just so happens to be the year that Google was founded. Actually, the proceedings for Microsoft, which was they were the defendant in the 1998 case, came in October of 98. Google was founded on September 4th of 1998, so literally just a month after the company was founded. So it's been a while, and it's a big L for the firm, so we'll get into exactly what it means going forward. All right, let's go ahead and run through some of these banana bits. We got a bunch of them for you today. First and foremost, Vice President and current Democrat frontrunner Miss Kamala Harris has selected her vice presidential candidate, that poor bastard. Anybody who's a vice president, I can't help but feel bad for after watching Veep on HBO, but she selected Governor Tim Walz of Minnesota. I don't know anything about this guy. I don't know even what he looks like. All I know is that he's from that he at least lives in Minnesota now. He might not even be fucking from there. But either way, that's who Vice President Kamala Harris has picked. We don't get political here at the Peel, so let's go ahead and move on to our next banana bit. We have X, Elon Musk's artificial intelligence company, is feeling very suey lately. So this is pretty funny because Elon likes to make comments about Jeff Bezos and Blue Origin being called Sue Origin because they essentially just sue NASA and the Department of Defense every time that SpaceX or Boeing wins a contract that Blue Origin doesn't win. Elon is kind of taking a page out of Jeff's playbook because not only is X actively suing an advertiser coalition for basically boycotting buying ads on X, but Elon has also reopened his suit into OpenAI. That one's not linked in there today, but nonetheless feeling very suey over the past couple of days. Meanwhile, the United States services sector is still going strong. I should have linked this yesterday. The report is from Monday, so it's, not really relevant anymore. I mean, it's relevant, but it's not moving markets. Services PMI is looking strong at 54.5%. Amazingly, somehow default rates are starting to decline. I don't know how that's even possible, but certified smarty pants Torsten Slok at Apollo says that defaults are starting to decline. And when Torsten says, sell, I say how much. When he says jump, I say how high. Like, whatever he says, we'll do it over here at the Peel. All right, moving on down below, Airbnb completely fucking shit the bed on their earnings report, down 14% after citing slowing U.S. growth. Johnson & Johnson's former consumer healthcare unit absolutely destroyed their earnings. The company is called Kenvue, and they completely killed it. This is the owner of brands like Band-Aid, Tylenol, and other shit that you probably have in your cabinet. So you are why they are killing it. Meanwhile, Molson Coors, you're also why they are killing it, because this company, yes, behind Coors Light and a couple other beer and beverage brands, they killed it on their earnings report as well. All right, our daily poll of the day is going to say something along the lines of, what's your favorite Summer Olympic event to watch? We got a couple of options in there for you guys. Make sure to come back tomorrow to stick around and see what the answer is going to be. Okay. Let's go ahead and get into our main story of the day. We are talking about the economics of the Olympics, and this was a fun one to research and write about here. Now, it did take me a while to research it, so, hopefully Patrick's not too upset with me, but nonetheless, we got some sick charts to go through, so let's go ahead and talk about it. The Olympic Games, they began in Athens in 776 BC. There was one event. It was a 192-meter foot race, and I don't think they ever envisioned that the Olympics would become what it is today. Literally billions of people around the world tuning in. They probably didn't even know a billion could be a possible number of anything at the time, besides maybe grains of sand on the ground or whatever the fuck else was going on back then. Nonetheless, thousands of years later, we are still going strong in the games. Now, there was a huge gap between 374 BC and 1896 because when Rome went Catholic, they ended the Olympic Games because of its pagan affiliations, because originally it was games like in honor of Zeus. Nonetheless, they brought it back in 1896. So from a 192-meter foot race in 1904, the St. Louis Olympics, look up the St. Louis Olympics marathon in 1904. It is some of the craziest shit that you'll ever envision. I can't even express all the craziness that was going on. My favorite facts from that Olympic event are that there was one guy, and I believe he came in like 6th place, who was literally chugging rat poison and brandy the entire race. His coaches didn't believe in drinking water. Sounds like me on a Friday night. God, that was an awful joke. Anyway, a couple other things. The actual guy who won drove his way to the finish line, so they gave it to somebody else who was actually wearing dress shoes to win the race. The 9th place and the 12th place winners weren't even in the Olympics. They were just bored walking around St. Louis and decided to hop in on the marathon. Only 14 of the 40 runners actually managed to finish the race. Crazy shit. I don't think they ever imagined that that's what it would come to, but it's a very funny event. So with that in mind, not every Olympic event turns into a frat's beer Olympics, but they are still entertaining to watch nonetheless. Now, the big question that we're talking about today is it really beneficial for the host city? Well, to understand that, we got to go over some of these numbers here. So our first chart of the day, this is showcasing you the cost of the most recent Olympics. Every Olympics that's occurred this century, besides the current ongoing one. And they range from a low point of $2.9 billion for Salt Lake in 2002. We know the Mormons couldn't give a fuck about the Olympics out there. Up to a high of $59.7 billion for Sochi in 2014. I had no fucking idea what the hell Sochi was before 2014. The city, quote unquote city, has literally 446,000 people living in it. It is smaller than Boston, Massachusetts, smaller than probably most like cities that would be considered rural in China as well. But nonetheless, they did host the most expensive Olympic events ever. Now, if we break these numbers down, the average cost of hosting a summer Olympic Games, so we're only looking at the top row in this chart for those of you watching on the video, the average cost of hosting a summer Olympic game in the 21st century, aka in the second millennia, has been $21.5 billion. Now, that average is pulled up quite a bit by the Beijing Games at $52.7 billion. It looks like the median is going to be somewhere around 18 or 15 billion, so that's probably a more accurate estimate. The Paris Games, Paris is currently estimated to be spending somewhere around the $8 billion mark. Now, big disclosure here before we go any further. All of these are estimates. It's extremely hard to quantify the economic benefit that the Olympics bring because it's such a sprawling, kind of far-reaching event. But nonetheless, we're going to do our best. We're relying quite a bit on the Center for Foreign Relations. Is that what it's called? Something like that. Either way, it's the Council of Foreign Relations. That's what it's called. We're relying on them to quantify a lot of our numbers, but nonetheless, keep that in mind. The average cost of the Olympic events this century has been $21.5 billion. Now, if you're an investor, obviously you say that's a huge expense. That's half of what Meta is spending on AI this year. Like, that's a ridiculous amount of money right there. They better be bringing in some good revenue. Well, you would be wrong. Any rational investor would short the fuck out of the Olympic Games, and let me show you why with our next chart right here. What you're seeing in this chart is these blue bars showcase the estimated earnings directly tied to the games themselves. So we're talking about TV advertising revenue. We're talking about ticket sales. We're talking about sponsorships, all that stuff all added together. The IOC, the International Olympic Committee, does take over 50% of all TV sales that go for the Olympics. So they're kind of robbing these host cities. And so what we're showing in these bars is like that estimated total. Now, the absolute highest amount was about $9 billion for Rio in 2016, and the lowest amount was Sydney, closer to about $3 billion in 2000. Now, inflationarily, that makes sense, but the really interesting part is this lighter blue line right here. This is showing you the percentage of cost that revenue generated, and as you can see, the maximum point that it reaches is about 68.7% for the Rio Olympic Games. So the return on investment for the Olympics is absolutely disgusting. The lowest one that you're seeing on here is Beijing. They, in terms of total revenue, they generated about 6.8% of the 2008 Summer Games cost. So horrible investment. These margins are disgusting. That's like a negative 94% margin right there. So horrible, absolutely disgusting. Nobody wants to see this at all. No investor would ever even consider buying into these games, even if he was completely hammered out of his mind, like that guy in the St. Louis Olympics. But nonetheless, it is still something that cities love to compete for. There are other benefits that these cities and countries are going for. And, you know, like obviously New York is going to get a different benefit than Sochi if they're hosting the Olympic Games. Sochi's benefit, people know that it exists, I guess. Nobody's going there on a tour or anything, but still people know that it's a real place, I guess. So that's a good benefit in itself. Now, some of the other locations saw some strong tourist numbers as well. And we are going to talk about this chart in just a quick second. I didn't mean to switch to that, but the tourist numbers generally help out a lot of these under-toured cities, especially Rio de Janeiro. So the 2016 games, for example, based in Rio, they got 1.17 million additional visitors that they otherwise likely wouldn't have received based on historical trends. That brought in an additional $1.2 billion in tourism-related fees for the city. Nonetheless, Rio still had to be bailed out by the federal government of Brazil to cover the cost of these games, largely because they had to build out a shit ton of infrastructure to host all of those tourists. The IOC requires that you have at least 40,000 hotel rooms for all the attendees, athletes, staff, everybody. So Rio had to build out an additional 15,000. Obviously, there's enormous cost overruns. We haven't seen an Olympic Games that hasn't overrun its budgeted cost since 1960. Every single one goes well over its budget, and Rio did, maybe by the most of the ones that we're talking about here today. God damn it, I keep doing that when I'm trying to scroll through on my other screen right here. Now, actually, Barcelona was an interesting case as well here, because the Council on Foreign Relations was talking about their tourism numbers. Apparently in 1990 it was 1.7 million, and then by 2017 it was up to 7.4 million. And the CFR is citing the Olympic Games as driving a lot of that increase, but to me it's probably just along with the increase in international tourism that's occurred over the last 3 decades. But nonetheless, it still worked out well for Barcelona. The real benefit, however, is hidden within our next chart that I totally didn't accidentally show you about a minute ago. This is the earnings for medalists in the Olympics. So what you're seeing in this dark blue bar is the earnings for gold medalists. In this lighter blue bar, it is the earnings for silver medalists. And in this like kind of sky blue bar, or I guess like royal blue bar, it is the earnings for bronze medalists. And let me tell you something. If you win a gold medal in Hong Kong or Singapore, you are loaded. So the Hong Kong government is going to give you $786,000, and the Singaporean government is going to give you somewhere in the same realm, around like $780,000 in total, just slightly less. Next up, we have Indonesia, Israel, Kazakhstan, Malaysia, Spain, France, South Korea, the US, Japan, Poland, Germany, and Australia. That is the order in which it goes. If you're a gold medalist in the United States watching this, please fucking stop. Go rest up. I'm sure you need it, and your money is probably fine, because if you did just win a gold medal, you now have an additional $38,000 to your name. Now, it's not a shit ton of money or anything, but it's a pretty good chunk of change to receive for playing a game at the end of the day, or being the best in the world at a game. I'll put some respect on their name. But still, this is one of the biggest benefits right here. Really, I think the true benefits to the Olympians comes in the bragging rights and the recognition and the fact that they are the absolute best in the world at something. But nonetheless, it was still a pretty cool it's cool that the governments just hand out money for winning Olympic events like this. It's great that, you know, fervent nationalism is driving that much of the Olympic earnings. Now, some of these other countries get pretty creative with it. In addition to the cash awards, Kazakhstan gives medalists 3, 2, and 1 bedrooms for gold, silver, and bronze medals. 1 bedroom apartments, that is, for gold, silver, and bronze medals. Malaysia promises a, quote, foreign-made car to anybody who makes it to the podium. I assume that means if you're a gold medalist, you're getting like a Bugatti, and if you're a bronze medalist, you get like a Ford or something. I hope that that's how it breaks down. But the best awards of all are Polish canoeer Klaudia Zwolinska, I think is how you're going to pronounce that. Klaudia Zwolinska is a Polish canoeer, and she won silver, and she is receiving a painting, a vacation voucher, an educational scholarship, and a diamond from the Polish government. Nonetheless, love the creativity that they're seeing right there. Moving on, this is our final chart that we wanted to show. It's the expected revenue that's going to be earned over the next couple of Olympics, but I think that basically sums up the economics of the Olympic Games that we want to talk about. So it's a horrible decision to invest in the city that's hosting the Olympic Games, but it's great to invest in the athletes that are going to be winning them. Let's go ahead and move into some of our stock moves of the day. First and foremost, we have Uber up 10.9% for the session. Company absolutely slaughtered its earnings report. They saw a 23% increase in their gross bookings, at least for the mobility segment. They did beat their earnings estimates by 51.6%, delivering 47 cents per share. Whereas the estimates were at 31 cents per share. Revenue grew 16%, total trips grew 21%, and daily active users grew 14%. They also saw strong performance for the Uber One subscription. That's a high margin business, helping to improve margins for the quarter as well. Very good job by Uber. Moving on down into Palantir, this stock was up 10.4%. The CEO described demand for artificial intelligence as unrelenting, and I think that word would be more accurately used to describe my nicotine addiction, but nonetheless, they did say the same thing for Palantir's AI demand that the company is supplying. So they saw 27% total revenue growth to $678 million. U.S. commercial sales were the leading growth factor, up 55%, guiding for 47% full year growth in this category. They also saw 23% growth in government sales. ChatGPT is out here helping students cheat, but Palantir is helping us artificially and intelligently blow the fuck out of people from more than half a world over. So I guess that's where the real demand is. Who knew that the real money is coming from the Department of Defense? Nonetheless, a great quarter for Palantir, living up to that valuation. All right, let's move into what's rotten. I feel like we should be hosting a funeral for this first one right here because the stock was down 53.8% for the session on Tuesday. We are talking, of course, about Jumia Technologies. This is an African e-commerce payments platform. It's basically Amazon with Venmo combined. It kind of runs the entire continent over there. And yesterday's decline was the worst thing to happen to African investors since Belgium showed up at the Congo, quite honestly. It was absolutely horrible. The company reported a 17.2% drop in total sales, but it really wasn't all bad. The company, at the same time, despite that drop in sales, reduced its cash burn by 55% to just a slight $8.7 million. They slashed marketing spend by 19%. So despite the fact that sales fell 17.2%, they cut at least one operational cost by 19%. It wasn't enough to improve margins, but it at least softened the blow a little bit. Shares have already risen 215% year to date. So the company's more than tripled, falling by half. I mean, it's really not that bad. They're kind of more on par with a sober year to date return for the stock right now. Again, down 53.8% in a single session. Finally, that brings us to Chegg, down 22.5% on the day. An absolute massacre for this quote-unquote education company. Speaking of ChatGPT, Cheat GPT is what we should be calling it. ChatGPT has not swagger-jacked anybody nearly as hard as they have Chegg. They've basically stolen their entire business model. Even though Chegg does have its own cheating AI bot, people aren't paying for a Chegg subscription when they can get the same information from ChatGPT. Now, the company did beat across the board, however. They beat expectations by 2% on sales and 6% on earnings. Free cash flow swung from $25.3 million in the prior quarter to a loss of $3.7 million. Not a huge loss, but a loss nonetheless. Like I said, subscribers dropped 8.4% because everybody is just going with ChatGPT. All right, let's go ahead and move into our thought banana for the day. We are talking about searching on Google how to appeal an antitrust case because they are almost definitely going to be appealing this. So let's break it all down here. On Monday, a U.S. judge named Amit Mehta, this is a highly respected judge by a lot of people on Reddit, from at least what I saw in the comments on the legal forums and the law forums and the Google forums and all the other shit that I busied myself with here today. This judge, Amit Mehta, found Google guilty of violating the Sherman Antitrust Act, and specifically Section 2 of the Sherman Antitrust Act of 1890. This guy Sherman, His parents must be so proud of him. He made this law 134 years ago, and it's still being used to bring down great American empires like Google. And in fact, you can tell that this is something that nobody really knows about except when it comes up if we look at the Google search trend data. So it's tough to see. My Buc-ee's cup might be in the way for a lot of you watching on the video, but what we're seeing is a spike in search traffic for Section 2 of the Sherman Act. Basically spikes every time there's an antitrust case. The last time it did was when the DOJ was inquiring on Microsoft and their purchase of Activision Blizzard. So that was the last time it spiked. That's the 100 baseline that we're going off of. But in this case, we are at the second highest of all time. It's probably going to set a new record. And it's funny because everybody's looking this up on Google, the company itself that is getting the antitrust charges slapped on them. So, kind of making the DOJ's point for them. But nonetheless, the Department of Justice and 38 state attorneys general brought this case way back in 2020, and it's taken so long, and now we can finally see why. The judge, Mr. Amit Mehta, he published a 276-page ruling document going balls deep into everything that you could possibly want to know about related to this case. I definitely recommend going in and checking that out at least a little bit. There's a table of contents so you can scroll through it. It makes it a little bit easier to understand. But from what I can tell, there's basically three things that Google did. So to take a step back first, Section 2 of the Sherman Act outlines three ways in which you can violate it by being a monopoly, essentially. First and foremost is to monopolize an industry. Secondly is to attempt to monopolize an industry. And third is to combine or conspire with others to monopolize part of trade or commerce of a given industry. So basically, you can't have a monopoly, can't try to have a monopoly, and you can't work with other people to try to have a monopoly. Google was found guilty of all three, allegedly. According to Mr. Amit Mehta, this is definitely going to get appealed, so this isn't the end of the road whatsoever. But basically, the biggest three violations that Google engaged in were, one, exclusive deals with Apple and Android-based smartphone makers to essentially block out competition. Secondly, to use revenue share agreements to block out that competition. That's the idea of conspiring with others in order to do so. So that we've already checked off boxes 1, 2, and 3 because it's... They have monopolized the industry, according to the DOJ. They attempted to with these exclusive deals, and they colluded with others to do so with the revenue share agreements. And in doing so, they foreclosed much of the general search engine advertising market through those restrictive agreements. That is essentially what they're saying. Those are the three violations right there. And although this didn't necessarily matter in the case, I thought it was an interesting visual because this is showing you the DOJ's assessment of the market share of general search advertising. So in this red is Google, in the blue is Bing, and in this pink is everything else combined. The DOJ in the suit defines a monopoly market share as anything over a range of 60 to 65%. And then that range, it'll depend on exactly the industry that you're talking about for which one is going to get you slapped on the wrist or called a big naughty boy in front of Congress. And that's exactly what Google did. So Google kind of checks off all of these cases. A lot of people have been saying that this is like a clear-cut violation of the Sherman Act. So maybe Google won't end up appealing because it's such a clear-cut violation. But nonetheless, it was very interesting to see this. My absolute favorite fact about it is that Ms. Walking L. Lina Khan, who was brought in to chair the FTC specifically to bring down big tech companies, had absolutely nothing to do with this. Nonetheless, the big takeaways for this session are the DOJ and these AGs are figuring out how to regulate big tech. So a lot of nerves are going through Silicon Valley at this point, both good and bad nerves. Bad nerves from the big players like the Googles, Microsofts, definitely OpenAI, Amazon, all those other ones. But it's actually exciting nerves from some of these other startups in the space. So a lot of companies are coming to the market, especially with artificially intelligence-based technologies, to try to dethrone Google's monopoly power over the search and text-based advertising market. So there's a lot of new startups that this could create an opportunity for. But again, big shakeup in Silicon Valley. Washington is learning how to regulate them. Let's go ahead and call it for the day because I have been yapping for way too long here. You take a week off from doing the podcast, you forget how to do it nice and concisely. We're at 24 minutes instead of 25 minutes from yesterday, and I am so sorry for that. I will shorten these going forward, but let's go ahead and end it with a banger here today. Whatever. Happy investing, happy trading. We'll see you guys tomorrow. Bye now.